Hi, and welcome to this week's look at the major news stories affecting the market so far. And it's been an interesting old week. What are we going to look at today? Well, we're going to start off and take a look at reporting season in the US and specifically what's happening to the US banks over there. Second up, we'll take a little look at cable. That's the Great British Pound against the US dollar. Thirdly, we'll talk about gold. That's had an interesting and record-setting week. And we'll finish off with a little look at NVDA, obviously one of our most popular shares. So what's been happening with US banks? Well, they're setting a bullish tone at the start of the earnings season. Now, the earnings are set to be a major driver for the indices, for the stock markets over the coming weeks. And traditionally, the largest banks kick it all off. They report first. For example, Bank of America, which was published on the 16th of July, their earnings per share was $0.83 or 83 cents per dollars against an expectation of 79.7 cents. Gross income actual of 25.37 billion against expectations of 25.22 billion, so over expectations, obviously a positive sign. We've got Goldman Sachs as well. They reported on the 15th of July with earnings per share coming in an actual figure of $8.62 versus the expected figure of $8.35, again above expectations. Gross income came in at 12.73 billion US dollars against an expectation of 12.35 billion US dollars. Other major banks have also reported, including JP Morgan, Citigroup and Wells Fargo, and they also surpassed expectations. So it looks like it's a pretty good earnings season to start with. Let's just mix it up a little bit. Notably, the formation on the XLF chart is interesting. Now, the XLF is the Financial Sector SPDR Fund ETF, which is available to trade at FXOpen as a CFD. And basically, it's focused on the financial sector, includes shares of the largest US banks. If we take a look at chart what that shows in 2022 to 2023, the price was in a broad range of 30.70, 36.6. In 2023 to 2024, the price forms an upward channel that you can see in blue. And the median line of that channel acts as support at the moment. The rising lows, A and B, resemble a bullish cup and handle pattern. You can find further information on that pattern on the website. Now, in wake of the positive bank reports, the XLF price broke through the 42.20 level. Resistance since March, really, that level. And the RSI is also overbought. Now, further positive earnings reports may push the price to the upper boundary of the blue channel that you can see, and the RSI could form a divergence, and subsequently a correction could form on the chart as investors lock in profits from this rapid period of growth. But overall, certainly positive earnings reports are pushing those big US banks higher. Okay, second this week, we're going to take a look at the cable price. That's the Great British Pound against the US dollar. That's risen above 1.3000 off the back of inflation news. As we can see on the chart, the cable rate rose above 1.30 on Wednesday, and that was for the first time in 12 months. And it followed the release of UK inflation data. Year-on-year CPI came in at 2.0%, but it was forecast to be lower at 1.9% and match the previous figure of 2.0%. Year-on-year core CPI came in at 3.5%, again slightly higher than the expectation of 3.4%, and again the same figure as the previous month. Thus, expectations not met has given reason to believe that perhaps the Bank of England's tight monetary policy may continue for longer than was initially anticipated. We were expecting a cut pretty soon, but this slight, not increase, but above expected figures has provided a bit of boost to the Great British Pound. However, on the second half of Wednesday, the bears fought back a little bit, and a bearish engulfing pattern was formed on the chart that you can see with the arrow. Now, early Thursday, bearish activities increased after the jobless claims figures were released. Now, the number of jobless claims was 32.3 thousand versus an expectation of 23.4 thousand, so again significantly higher. But actually that has clouded the expectations over the Bank of England keeping monetary policy tight for longer. It may in fact spur them towards reducing the interest rate. So the price has fallen below that psychological level of 1.30 again, raising the possibility of a bearish breakout. Now let's take a closer look at the chart, and that shows us the price is in an upward trend, that's shown in blue. And after Wednesday's bearish engulfing, the price still in the upper half of the channel. So again, not a lot of clarity there. Exhaustion of the bullish sentiment seems appropriate in light of the rally from its July low, which has been approximately 3%. And if that continues, we may see some weak rebounds from the median line and the lower boundary of the channel that you can see. Now, key support appears to be the previous resistance around the 1.294 level. If the rate consolidates below here, it may become relevant to look for patterns to start building a descending channel. But there is an awful lot of factors and drivers in play at the moment, as there has been for several months. So don't forget your risk management techniques and keep your eyes and ears open. Okay, now to take a look at one of the safe haven assets, and obviously one of the most popular commodity markets, and that's gold. And the gold price has set an historical record. Now the chart shows that on the 16th of July, the price rose above 24.60 for the first time in history. That's $2,460 per troy ounce. Why has this happened? Well, we're being driven at the moment, the gold price is being driven by an anticipation of Fed rate cuts. It's still there. They're still talking about it in the market for later on this year. But also, of course, geopolitical tensions. There is a belief that the assassination attempt on Donald Trump has possibly boosted the demand for the safe haven assets. We've seen this in a couple of markets. Time period may be coincidental, but we can't discount that fact. There's also been demand from central banks. In fact, Reuters reported that analysts at the Commonwealth Bank of Australia believe the price could exceed their end-of-year forecast of $2,500 per troy ounce this year. And they also said that it is worth highlighting gold's ability to find support under any conditions this year. That's a pretty chunky statement. Well, can it go higher? Well, the chart suggests the price is in an upward trend that you can see in blue. The support level at $2,290 per troy ounce is also reinforced by the median line of that channel, and that pushed the price up, as we can see with the arrows. The bulls managed to break the $2,385 level, and that's acted as resistance since the 7th of June. And the bearish head and shoulders pattern that we can see in the chart failed. Now, the contours of the upward channel suggest the potential for the gold price to rise to the upper boundary of that channel, where the psychological level of $2,500 per troy ounce lies, and was a Commonwealth Bank of Australia's target for the end of the year. And it's fair to say that if these conditions continue, that Commonwealth Bank of Australia target for the end of the year could come true much, much earlier. Again, an important market in uncertain times, and many other factors influence the gold price. So take in as much information as you can, as always. Okay, and to finish this week, again, one of our most popular stocks is NVDA, and NVIDIA's stock price has recovered after a 1.5-month low. Wednesday saw the price fall to $116.61 per share. That's the lowest the NVIDIA price has been since June the 5th of this year. So what factors contributed to that? Well, Donald Trump's cautious remarks regarding the necessity to defend Taiwan from the threat of military action by China had a bit of an impact. In fact, he was saying the island could pay for US defensive support, or in fact should pay for US defensive support. Now, these comments led to a drop in semiconductor manufacturer stock prices. The TSMC, Taiwan Semiconductor Manufacturing Company, price fell by 8%. NVIDIA fell by 6.6% off the back of that, as TSMC is the main AI chip provider to NVIDIA. Pre-market Thursday, the price has recovered slightly and is now above the $120 per share mark. So what may happen later on today and in the coming days? Well, on the 10th of July, we said that the strong selling pressure that existed above $130 per share could well have an impact, and the price is down approximately 9% since then. The bears twice aggressively pushed the price down during that time period, and you can see that from the arrows on the chart. The price did find support from the gap zone around the 115 level, where the bulls broke through the May highs on June the 4th and June the 5th. The price is still moving in that upward channel in blue, but it has dropped to the lower half of said channel, and the price has formed a wide bearish gap with the upper boundary at around $125 per share. Now, it's not just Donald Trump's comments, but also the fact that NVIDIA's price is actually underperforming the stock index now. And that's despite being a market leader in the first half of this year. And that's quite an interesting turnaround. If the bears continue to hold the initiative, it is possible that we may see their aggression kick in from around the $125 per share mark, rather than that previous mark of $130 per share. Now, if that is the case, then the lower boundary of that channel you can see, I think it's fair to say, would be at risk if this pattern continues. So don't forget your risk management techniques. And again, just another indicator that it's not just about earnings that moves these prices. It's about what happens around the globe. So eyes and ears open, look after yourself, and we wish you luck with your trading in the week ahead. Bye for now.